The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching. And President Donald Trump has told the United Nations he condemns moves by Western powers to recognise a Palestinian state as the US appears increasingly isolated in its staunch support of ally Israel. Meanwhile, US President Trump has said he believes Ukraine could retake all its land occupied by Russia and that Kyiv should act now, with Moscow facing, quote, big economic problems in a sudden and striking rhetorical shift to Ukraine's favour. And US Federal Reserve Chair Jay Powell said on Tuesday the central bank needed to continue balancing the completing risks of high inflation and a weakening job market in coming rate decisions, even as his colleagues staked out arguments on both sides of the policy divide. Let's get across the charts now with Chris Weston from PepperStone. And of course, Chris, great to see you, but all this expectation of further rate cuts just continuing this rally for gold.
Well, I think that's part of the reason. To be honest, I've if you could pick 10 reasons why gold's doing what it's doing, I think what I mean by that is that you've kind of got these investment cases for gold. You've got China buying. I think that for me is probably the big driver, and I justify that claim by the fact that since China really claimed and increased gold as a percentage of their total reserves since that was really coming out late 2022, and that sort of coincided with a very strong correlation with the move in the price of gold. So I think China continuing to buy, other EM central banks buying is a major factor. You talk about rate cuts. I obviously think that's an obvious factor as well. And the Fed are trying to ring fence some of the left tail risks that's emerged from the labour market. But growth generally in the business sector is pretty good at the moment, running a sort of 2.5%. You could talk about the dollar really not getting much traction. It had a weak first half, but then a very weak first half, but it's sort of just been oscillating and can't really find any upside traction. Moving real rates, Fed influence, independence. There's a million different reasons. I think for me, the main thing, and obviously apart from the China buying, is the fact that you've got so much flow-based effects that are really perpetuating the move higher now. You've got investment managers who are looking at gold and saying, look, it's working well, but it's also incredibly uncorrelated, very, very low correlation, statistical correlation, both short and longer term, to the S&P and also to the Treasury market. And if you're looking for an optimal diversifier in the portfolio, you want something that isn't correlated to other markets. And the fact that gold has no correlation makes it very, very attractive in that market. And I think people sort of run with this idea of having a 5% weighting towards gold. Well, I think that's probably now 10%. It works in all these different mantras when, those factors don't benefit the equity market or the Treasury market. And therefore, gold has that sort of diverse investment case, but low correlation. As it's going up, you've got all the CTAs, systematic funds buying. They're probably getting towards the top end of their max capacity in the futures market. Out the money call buying in GLD and various factors, and that's seeing dealers push and hedge their flows through the spot price or through the underlying futures market. And so all those flow-based effects, I think, are really perpetuating the move higher. So, I think any of those sort of investment thesis, why it's going up, you could pick anyone on any given day. But for me, it's just this is a flow-driven move now that's perpetuated into something more of a momentum shift. So can it continue? Absolutely. Pullbacks are very shallow, and I expect it to be well supported here.
It's encouraging to meet someone in markets who says there's many reasons, not just mine. Chris, let's talk about Nvidia though, because it did have a pullback overnight, but I mean this continued momentum and the tie-up with Intel is extraordinary. Yeah,
I don't know if you got the chart there, but I think if you have a look if you have a look at that, we've hit this kind of this ceiling on the price around 183. And I think maybe a few technical sellers, because when the cash market opened yesterday, 11:30 at night for us, we did see a flood of sellers coming through, and I don't know if that's necessarily a technical factor or just the fact that there was just a lack of buyers in the market, and things can fall under their weight pretty easily when you see that. And Nvidia really relies on markets moving up, people buying out of the money options or zero DT options, and then obviously you turn into a big flow based capacity. But I think for Nvidia, you've seen the tie-up with OpenAI, and that's a staggering deal for them potentially, but it's a long-term deal. When those data centers are going to take a long time to be buying. The GPUs that OpenAI are going to be buying, a huge amount of GPUs from Nvidia, will take time to feed in, and it's going to benefit their 2027 earnings profile. But you are looking at a stock right now. Where does this go? Well, obviously the bulls, and the way that I'm playing from this tactically is just obviously wait for the price to close above that sort of metaphorical ceiling. And that tells you about the structure of the market. The bulls are firmly in control. It gives me an increased probability that this could kick and build up towards $200. Now, we're going into the earnings season. These guys don't report until the 11th of November, so it's a little bit of a way off. They're obviously at the last there. But, if you look at the earnings profile for the company now, and obviously, if you look further down, you are looking, this is a margin story. All the semis is a margin story. That's what drives valuation. And, margins for this quarter are expected to 73.5. That will build to 74, up to 75 by the end of the year. It's going in the right direction. The market likes that. You feed in all these other factors that are happening with Intel, OpenAI, and it just means that the future earnings profile, revenue profile is going in the right direction. People do come out and say, look, they've got such a concentrated customer base. But at the moment, what we're seeing in the US is this big capex shift. It's all in AI, it's all in the hyperscale, it's all in the in the structure around data centers and the technology. And Nvidia are one of the winners there. So I'll be waiting for breakout. Let the market see what I'm seeing. Tell me that I'm on the right track, and then you increase the probability. So wait for the close above that. I think $200 is the trade then.
All right, I want to get as well to what we're seeing with the Aussie-Kiwi, and worth pointing out that New Zealand has just appointed Riksbank's Anna Bremen as central bank governor. I think the first time they've had a female, and of course as somebody who's not Kiwi. But what are we seeing in the Aussie-Kiwi here? Yeah,
great to see a bit of progress there, and I've sort of looked at her credentials, and she's got a hard job ahead of her, like probably not as hard as what Jay Powell's got with political interference playing through and being called a moron every single day. But they're in a position where they're going to be looking to cut rates at the next meeting. I think it's on the 8th of October in New Zealand. I haven't actually seen when she starts, if she started right now, or when her term starts. But they don't have a huge amount of data up until that meeting, and the swaps market in New Zealand is now pricing 31 basis points. So it's a live meeting. Could we get 25? Could we get 50? But with a lack of data, we're going to have to get guidance from a central bank. Otherwise, you could see some big volatility over that central bank meeting. Turning to Australia, though, if you have a look at the Aussie-Kiwi cross, and I brought this one up specifically because Aussie against the US is just seeing a bit of indecision. The US dollar is obviously the big driver of that, and things like dollar CNH is obviously a big factor. But the one everyone's been focused on is Aussie-Kiwi, because you've got a much cleaner relative rate story playing through there. And on Aussie, terminal rate pricing, the perceived low point for the RBA has been moving up relative to what we've seen in New Zealand, progressively, and that's been very well correlated with this cross. So that's why I like it, because it's just from a macro tactical perspective, it's just a much cleaner play on relative growth and relative interest rates. And what we've seen today with this. With the monthly CPI print coming out at 3%, the core number on the monthly August number, they're coming out at 2.6%. People are going to sort of give this one a bit of a wide berth. It has pushed the Aussie up very 10 pips or something, very modestly. But obviously, all the economists are going to be extrapolating the various factors that play through in these partials, put them into their run rate, their tracking rate now for the Q3 CPI number, which is very, very important for the RBA, and that comes out on the 29th of October. So, I think really we're not not that anyone was expecting a rate cut in September, but I think this obviously just takes it firmly off the table. The big talking point now is what is the probability for a rate cut in the October meeting, and in the November meeting, which is still some way away. But if we have a look at rates pricing at the moment, just bear with me, I'll just tell you what I'm seeing. We've got about 70, about a 2 and 3 chance, a 3 and 3/4 chance of about 75% chance that we get a rate cut coming through in that November meeting. So it's lowered the probability a little bit, but it's still. The market's still saying that on balance we're going to get another cut in November, and that may be the last one we get, although there's still a good chance we get a second in the market pricing. But this will only do the Australian dollar favours, but the best way to trade this, as we're seeing in that momentum, is against the Kiwi dollar. So obviously if you're looking at going on holiday, New Zealand's looking like a cheaper relative alternative there.
Don't have to ask me twice to look for a holiday, Chris. Thank you so much. Have a great day. Chris Weston from PepperStone. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.